What's up, y'all? It is Bella, Back Testing with Bella, Trading Day. Now, I was supposed to drop a video on an ICT buy model yesterday, but fuck it, I'm gonna drop it today. Before I get into this video, please like, comment, and subscribe. Help my channel get to the next level, help it reach YouTube algorithm. If it's helping you, please let it help someone else. So, I am going to show you guys how to enter into a trade using ICT buy model, in which I will drop a diagram for the exact example that I'm going to show you in this video today. So getting straight into it, let's get into it. Oh, another thing, if you guys have not already, please go ahead and join my free Discord. It's free. I'm there. I'm available every day. You know what I'm saying? So it's free. So first of all, I am going to start off with the steps that you need to have in place in order to enter in for an ICT buy model. So for your ICT buy model, the number one step you're going to look for is a draw from sell side liquidity. So the number one thing you want to see is that sell side liquidity has already been taken out. The reason why you need to see that sell side liquidity has been taken out is because once sell side liquidity has been taken out, then there is always going to be a pop in the market, and the market is going to go back towards buy side liquidity in order to rebalance itself. That is trading algorithm towards straight from the inner circle trader, ICT. So after sell side liquidity has been taken out, you are going to look for a displacement back into the market. You're looking for a displacement back into the market. Your third and your final step is going to be your target points, which is back towards buy side liquidity. So these are just 3 simple steps that you want to have in place. That's going to be your A+ setup. This can also be a optimum trade entry, because I am going to be using Fibonacci in this example. So let's just get into replay mode and let's go from here. So you guys will see from here, sell side liquidity has already been drawn and has already been taken out. So sell side liquidity has been taken out from this breaker structure here. So when this breaker structure happened, it basically broke a swing low and it broke sell side liquidity. So this was the sell side liquidity. This is the drawdown. And I'm just going to zoom in bigger so you guys can see more clear. Bring it down some so you guys can see clear. So this is where sell side liquidity has happened. So when I am using my Fibonacci levels, I am taking it from a swing low to a previous swing high, an obvious swing high. So that is my swing high up there. So you guys can see on here, if I am going to enter in for a trade, it is going to be from any one of these 3 levels. Now, optimal trade entry would be at the 70.50% line, so it would be at this line here. Let's make this a different color so you guys can see. So if I'm going to enter in for a trade, my optimal trade entry would be from 381. This really quick. So you guys can see from here. So from here, perfect entry would be back into this fair value gap. So like I said, that is the second step. So the second step, your entry is entering back in on a displacement. So if I was entering back in from a displacement, it would be from this bullish fair value gap. Extra confirmation that it is going to go towards buy side liquidity is that this is a bullish fair value gap. So when I enter back into that bullish fair value gap, chances are it can trade higher and go back towards buy side liquidity. So just to make this purple, you guys see that this is a bullish fair value gap at that level. So now I am going to have my entry towards 381. So just a market level from here going to put entry 2 so it's getting me big. Entry, I'm going to make this a different color. So you guys see at that orange line, that will be my entry. These are my targets. So I told you guys I do set my targets going back towards buy side liquidity. So target 1, 382. My second target will be at the, I'll put my next target at this next fair value gap fill order block, 383. And I will put my third target towards 385, buy side liquidity. So if I'm entering into a trade from 381, I do want to see this go back up to 385. So now you guys know when ICT is entering on his trades, he do enter from lower time frames. So you guys can see clear how it's kind of rejecting here from the 5-minute chart. It's rejecting from a rejection block. So ICT himself, he will enter down on a 2-minute displacement. So he would kind of like wait until it goes all the way down until this failed. So from here, this can be an entry, obviously. So just to be a little more safe, you probably want to wait till it goes past this bearish fair value gap on a 2-minute chart. Sometimes that bearish fair value gaps, they can reject again. So this is an entry here. So ICT himself, he would go long. I will also add a long position here. So we enter in from here. You have your stop loss just below the last swing low. So I'll have it there. So you guys can kind of see how it did go back to 385. So if you were entering from 381, this is a great trade. This is a great ICT A+ setup model. And I am also going to add the diagram again so you guys can take a screenshot and, you know, just analyze everything that I have said about ICT buy model and how to enter for buys or go long using the inner circle trader. So that is my video for today. If you guys like this video, like, comment, and subscribe. You know what I'm saying? This is a banger that can definitely help you with your entries and exits when you are going long in the market. So, bye y'all.